Good afternoon, everybody. Welcome to this week's Realtor Training Series, where I go through different training program or different lending programs. And I don't teach you how to be a loan officer. No, that's my job. Okay. What I teach you is how to use these lending products, though, to generate more interest and to be an expert in what you do, which is sell real estate. And you can't sell real estate without knowing a little bit something about loans. So I'm here today. We are going to talk about zero down heroes, two of my favorite loans. One we don't get to do a whole lot here in this area. There's not a ton of area, but there are pockets. And if you position yourself right, you can really find a nice niche. And then the second one is my absolute favorite loan to do. I've been doing these my entire career. Love the VA loan. Um, it means so much to help a veteran, and these are fantastic loans. So I'm really, really, really excited about these loans. So VA and USDA buyers, they represent one of the most loyal and underserved segments in real estate. Don't know if you know that. So while most agents shy away from these programs thinking they're complicated or risky, the truth is simple. Knowledge equals market share. Master these zero down programs, and you're going to unlock a competitive advantage that builds lasting client relationships and referrals for life. For life. Okay. So if you're tired of chasing that next lead, this is something for you want to pay attention to. Okay. So let's move on. Okay. So what we have here is we have the VA loan the loyalty program, you call it, right? So who qualifies for for a VA loan? Any active duty service members, veterans, reservists, and eligible surviving spouses, they all have access to this powerful benefit. Okay. This is earned through their service. They have to have been in service for a minimum of 24 consecutive months. It can't be 12 months here, took 3 months off, and then went back. Okay. 24 consecutive months. However, if you're an active duty reservist and it is wartime, what we're looking at is you need at minimum 90 days. If it is peacetime, you need a minimum of 181 days. So if you are in service, okay, not boot camp, service, there are different eligibility requirements for that. Again, you don't really need to know that. If you stick to the 24 months, you'll pretty much be safe all across the board. Let me kind of delve into the other minutia of the qualification, right? So 0% down payment. This is a true no down payment required loan. No down payment that you can, it is 100% financed. So this helps make it really accessible, really affordable for a lot of veterans, right? They're taking advantage of their benefit because there's no down payment. You also have no monthly PMI. Here's, I need you to listen now. Okay. Yes. If you already knew zero down payment and you tuned me out, come back because the no monthly PMI is really important. A lot of times I've had borrowers who get convinced that they can't go VA or they shouldn't go VA, and they switch to conventional. Not with me. They go with a different lender, and their realtor has convinced them to, excuse me, to switch to a conventional loan. Okay, for reasons we'll talk about in a little bit. The problem with that is now you have PMI. Yes, your down payment may only be 3%. They may have already been planning on putting money down because, yes, just because these have no down payment requirement doesn't mean you can't. You want to put 10% down? You put 10% down. You want to put 5% down? You put 5% down. Put 50% down. It doesn't matter. You can still use this loan. Okay. There's no monthly PMI. There's no mortgage insurance. That can save you hundreds of dollars a month. Okay. We're not talking $50. We're talking sometimes $100, $200, $300, depending on how much you're purchasing. That's a lot of money. And what that does and I do laugh when realtors talk themselves out of the VA loans, is that it kills your buying power. If you're switching from a VA loan to a conventional loan, your buying power may now drop because now you have to add in the cost for the mortgage insurance. Okay. So no monthly PMI is a powerful tool for your veterans to know, even if they still plan on putting it down a down payment, no monthly PMI. Okay. That still can save them tons of money. You have typical lower rates, kind of like what we talked about with the FHA loan. Okay. Typically, anytime you see the word typically in any training, any marketing, any loan, anything, it means there's a chance it can't be. All right. So typically, yes, VA loans and government loans are cheaper than conventional loans. Typically, it's not always the case. Again, have them shop around. And there are flexible guidelines, right? So if you didn't know, a VA loan has no DTI guidelines. There is no maximum DTI. Lenders might have their own what we call overlays, which is their own rules that they'll only buy a loan if it's under a certain DTI. But a VA itself, at its core, is only looking at residual income. That's how much income's left over after you pay all your bills. Do you have enough to live? Okay. And that is something we determined through underwriting. Okay. These are some of the advantages. Okay. These closed deals, guys. All right. So seller concession, you can absolutely ask for seller concession on a VA deal. You ask for up to 4% of the amount of the loan amount. Sorry, it's 4% of the sale price. I got to fix this slide. It can go towards closing costs, repairs, prepaid items, things like that. It's your seller concession. Okay. You all know what that does. Again, we just talked about the debt to income ratios. It's looking at the residual income. Again, that's really, really smart. And here is that's really smart because it increases your buying power. So not only do you not have any private mortgage insurance, you also have an increase in your buying power because you can go, as long as you're showing you have money left over, you can go to a pretty high debt to income ratio. Okay, now appraisals. This is where most realtors go, oh, but the appraisal. Yes, it has to be ordered through the VA. Yes, a VA approved appraiser has to go out, and they're not stricter. Okay, they're not. It's simply ensuring the property is safe, sound, and sanitary. Okay. Think it's very similar to FHA. So if you attended the first training or if you watched this first training where I talked about the FHA and having that FHA checklist, um, if you're listing your property and you want to be able to take VA buyers, do a checklist. Run down the house, see if there's chip paint, see if there's missing railings, things like that. They just want to make sure the house is safe. No, it doesn't. And here's the other cool thing: if they feel it's coming in low, they're going to notify you and give you a chance as a realtor to say, hey, this is coming in under. What are you basing your comps on? And you have the chance to tell them why you feel it's worth what is the contract price. So they tell you ahead of time before the loan officer tells you. Okay, you're going to get a notification. Now, the thing is a lot of realtors don't know this, is that you have to structure it a certain way. You can't just give them addresses, right? You have to do a little bit of work. You have to compare it, and your loan officer should be able to help you with this. I've done this before. I have no problem submitting what I call contesting an appraisal and putting it in a way that the appraiser can easily justify using those comps instead of the other comps they're using. But they're not trying to kill deals. They're not trying to kill deals. They're not trying to underappraise just because. There's always a reason for it, and they give you a chance to tell them why you feel it's worth what you listed it at or what the contract price is. Okay. Here's your takeaway from these slides, right? You want to treat veteran buyers right. You'll earn referrals and loyalty for life. Okay. A veteran, it's a relation building client. Okay. They know other veterans. They have a wider network. They are loyal. Okay. Just inherently loyal to who they work with. So if you do the right thing for them and help them truly, then they are going to come back to you. They're going to refer you business. They may refer you business without you even asking, but if you stay top of mind, more than likely they're going to become one of your top referral sources. Okay. Not to mention a veteran client 9 times out of 10 is a very, very clean client. They usually don't have a lot of drama as around income or assets or and things like that. They've been saving. They usually, have a salary or they make, you know, trackable money. We usually don't see a lot of the things that normally will roadblock a loan. Okay. They're fantastic clients. And you can do them such a great service and they're wonderful referral sources. So don't ignore them. The next zero down hero is our USDA loan. So what if you get a client who does not have any military experience, who's not a veteran, who doesn't qualify for the VA loan? How can they buy a house using 0% down and nothing else, right? Well, maybe they're looking outside of the city. Okay. That's where USDA comes in. So buyers purchasing in eligible rural or suburban areas, they've moderate income guidelines based on household size, county limits, things like that. They qualify. So anyone can qualify as long as they have the credit and they have the debt to income and they meet the minimum income requirements. Okay. Minimum income requirements. Okay. People automatically assume that means poor. That is not the case. Sorry, I am suffering from, or I'm getting over a cold. So USDA service buyers earning up to 115% of the area median income. Okay. Most of your grant programs, most of your other programs are looking at 80% of the area median income. Okay. So 115%, that's going to include your nurses, your teachers, your police officers, middle class professionals who deserve home ownership opportunities, right? Again, the clients you're probably wanting to market to. So they can buy in USDA areas. Now, again, yes, the house has to be in a USDA designated area. Your loan officer or me can help you figure out which homes are in that area pretty quickly. And it's fantastic to use them to try to actually market, right? To market your house saying, hey, this can be used with an a USDA loan. That is a powerful marketing tool. Be like, hey, how would you like to buy this with 0% down? Right. So it's 0% down, low monthly guaranteed fee. Okay. So it's not mortgage insurance, it's a guaranteed fee. It's smaller than your conventional PMI and it's smaller than your FHA mortgage insurance. Okay. It offers competitive rates. And here's the other cool thing: 100% gift funds are allowed to cover your closing costs, and you can still ask for up to 6% in seller concession. That is right. 6% in seller concession. You can have someone buy this house with no money. I mean, I know we don't always love that, but that it for the right property for the right client. I've had it happen where people buy houses and their total out of pocket cost is like $4,000 or $5,000. Okay, 0% down, they ask for the seller's concession, they get the seller concession, and it really helps them move forward. And again, there are restrictions. Not everyone's going to qualify. Okay, USDA has debt to income ratio considerations that you have to consider, but it's a great product. It really is a great product if you have the right client who's looking in those areas. Um, So I highly recommend learning more about it and, marketing to it. If you have a home, let's market to it. Let's talk about it. Let's have conversations with your clients. So it's perfect for the first timer or a move up buyer priced out of the metro areas, right? So if they want that city living, but they just can't get that price range, maybe it's the taxes, maybe it's the sale price, looking right outside might be a better benefit. And remember, USDA loans, you can put a down payment on. It doesn't have to be 100% finance. Okay, that's only going to put them in a better position because again, it has that lower guarantee fee than a PMI. So right then and there, they're going to have more opportunity. It's going to be easier to qualify. And it's a very, very easy way to unlock affordable inventory and serve motivated clients. All right. So let's talk myth busting, okay? Because there's a lot of myths around these two types of loans. So I picked up my favorite ones. So I don't know why this one is still around. Like this amazes me. It's kind of like why 20% down is still around for conventional loans. Modern technology and VA loans take forever, right? VA loans do not take forever. There's not a second level underwriting. They're not sent to VA, right? We're in the year 2025. They can take 30 days, sometimes less with proper preparation. Okay. 30 days is average. I have seen them go shorter, I have seen them go longer, but it's not because there's this VA second review. That is a myth. If a loan officer tells you that, I don't know why they're saying that. I have some theories, but they shouldn't be saying that. Okay. VA appraisals kill deals. I do hear this often. I hate it. VA appraisals simply check for safety and habitability. They're not stricter than FHA or conventional appraisals. They're protecting the borrower's investment. They don't always come in low. Could they come in low? Yes. Do they tell you when it's coming in low? Yes. And they give you the opportunity to fight it. Okay. They actually give you that opportunity. So if it doesn't work, the comps really weren't there. Maybe you didn't price it out right. Okay. It happens. USDA. It's only for farms. I hear that a lot. It's not just for farms. In fact, the funniest thing, in New Jersey, in Willingboro, there's a street where one half is not USDA eligible and the other half is. I think they caught on because I was teaching that in a training once, but there's a couple roads like that. It is address specific. Okay. And a lot of times USDA approved homes are just 15 minutes out from a city. Okay. In New Jersey, you're pretty much looking in like your Burlington County areas. I know some of your Gloucester County areas. Once you get to middle and like towards the shore area, there's a lot out there that you can market USDA. In PA, Bucks County, I know has a couple spots, kind of more than that northern over the bridge of Trenton has some areas. So they're around, right? You just got to be willing to look for it. Delaware, there's some great opportunities in Delaware that are USDA approved. South Jersey. If you're not sure, talk to your loan officer, talk to me. I'll help you find and locate those areas that you want to target that are USDA areas. Income limits means struggling buyers, right? Oh, they're using USDA 0%. They're probably struggling or probably don't make a lot. Probably going to have a hard time. No, again, 115% of area median income for the area. So middle-class professionals, excellent credit qualifying, and make wonderful clients. Okay, yes, there is a minimum credit requirement for USDA. It is strict, and it also coincides with the maximum debt-to-income ratio. Okay, so yeah, these are not bad clients. These are good clients. These are clients you want. Like, it always makes me laugh because people think zero down means they're not serious, right? It means they don't want to buy. They have issues. No, not at all. These borrowers are fully underwritten with strong credit, stable income. They often more qualified than buyers stretching to make a 3% down payment, right? I've had it where like these are they are good clients, right? You look at your VA clients, your veteran clients, you look at who can qualify for USDA. It's it's not someone struggling, I promise you that. Okay, these are great buyers. So if you see one of these come through on an offer on a house that you are selling, don't push it away. Okay? If you don't understand or you want to have more, you have more questions, absolutely talk to that loan officer that issued the pre-approval. Have them ease your mind. Let them know what they've done already. Do your due diligence. Hopefully they're good like me where they will call you beforehand and you get to have a conversation about the borrower because these loans do have, different things. All right. So how are you going to market these? How are you going to use this to your advantage? Now that we know some things and we've busted some myths, how are we going to use this to your advantage to get more deals? You can brand yourself as a zero down specialist, right? Helping heroes and hometown buyers buy with confidence. What a great headline. Okay. It's a niche. This is a perfect niche marketing that I don't see around here. I do not see any realtors boasting that they are a VA specialist. I don't see them doing videos about veterans. I don't see them doing videos about USDA. And maybe because it's not that route, there's not a ton of areas in it. But imagine if you did take that leap and you started niche marketing. What could happen, right? Well, if you partner with veteran groups, you're going to meet veterans, right? So connect with your VW posts, military bases. My God, we have two military bases within an hour's drive, okay, from one another. I'd say an hour, hour and a half, okay? There's the Navy Yard over in Pennsylvania. There's a lot of different veteran organizations in the area. You can offer lunch and learns, VA Miss Busted in 30 minutes. You can partner with a loan officer, partner with me. We do presentation to help the veterans understand. And I know what everyone's saying. Well, they just use USAA. Yeah, they use USAA because that's what they push. That is not the best opportunity for them to buy a home. That is not the best company for them to use. Every client that I've ever talked to that uses USDA or even Navy Federal, I'm sorry to say, I can usually beat their rates. So I'm just saying there's more than those typical places that they go. You can still position yourself as a leader. There are lead generation certifications you can purchase. I don't buy into that. I mean, do you get leads? Yeah, you get leads, but it's with any lead generation. You never know what you're going to get. It all depends on how you work. So this is not like how to get lead generation. This is how you can do this organically, where you don't have to pay a ton of money to get the lead. You could do neighborhood spotlights, right? Film short videos showcasing USDA eligible homes. Educate buyers on what's possible in their price range. Host joint workshops. Partner with lenders for home buying education. Focus on VA and USDA. And again, you're positioning yourself as the knowledgeable expert. That doesn't mean do it once. All your media content. Focus it. I know what you're thinking, but if I niche, they're not going to know I can do everything else. I promise you that's not the case. I promise you that's not the case. I think this is the third time I've now said this in this series. If you niche market, you'll still get all the buyers and sellers. Okay? You're just going to fine tune to some really, really great clients. Okay, you're going to hone in on some really great clients. So share local success stories. This is the best thing, right? Do a client testimonial. Once you've done one or two of them, have someone do a video with you. Meet the Johnsons who bought their dream home 0% down right here in blah, 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 blah. Okay. Everyone loves to hear stories because then they relate to them and they go, you know what? If the Johnsons did it, the Smiths can do it. The Joneses can do it. Anyone can do it. So here's your challenge this week. And I hope you did the challenge last week, but here's the challenge for this week. Pull up one listing today that's USDA eligible and identify one buyer that's in your sphere that you're working with who serves in the military. Okay. You've just found two new opportunities that most agents are missing. Okay. So find a property that's USDA eligible. Find who the owner is. If it's not on the market, try to reach out to them. Find someone that you know in your sphere of people that you know that's a veteran. Okay. More than likely you would know it. And say, hey, have you ever thought about buying or selling a home? Two new opportunities most agents are missing. And here's the other fun thing. Most veterans love to sell to veterans. So if you're a selling agent, most of them like this, you can use that in your selling presentation. Be like, listen, I know you're a military person, or if you see it hanging on walls, say, oh, I see would you like to, would you be interested in hearing more about the VA loan so you understand in case you had a VA client? Would that benefit you? And they're probably going to say, yeah, that's how we bought this house. And that's how I plan on buying my next house. right? It's typically what happens. All right. So again, I try to keep these to 30 minutes or less because your time is super valuable. I hope you have used this information or you gathered this information. I know I go fast. If you'd like to schedule a 15-minute strategy call with me that go a little bit deeper on how we can fine tune and dive into these markets and into these niche marketing, scan the QR code that's on the screen. Okay. It's going to take you to all my socials. It's going to take you to link to book a call with me. Book that call. We'll go over some details. If it takes longer than 15, that's fine. I don't mind. Um, but but really, let's get you in the position where you're getting more clients using these awesome tools that are available. Again, they're loans that I love. Again, if you use any of this information to get your next client or to help your next client or an existing client, the only thing I ask is that you think of me as a referral possibility. And have a great week. I will see you next week where we dive into some other cool stuff. I'll send out the emails reminders throughout the week. Thanks a lot, everybody. I'll talk to you soon.